Welcome to another video from the Ontario 360 project, a project housed at the Munk School of Global Affairs and Public Policy. My name is Sean Speer. I'm a senior fellow at the Munk School and project co-director of Ontario 360. I'm pleased to be joined by my fellow co-director and professor at the Munk School of Global Affairs and Public Policy, Drew Fagan. And lastly, but most importantly, economics professor Livio DiMatteo from Lakehead University in Thunder Bay. Livio is joining us today to talk about his recent paper published by Ontario 360 entitled After the Storm, an overview of Ontario's fiscal challenges. Viewers can find Livio's paper on our website, on360.ca. But the purpose of our conversation today is to sort of unpack some of the key findings and analysis in Livio's paper. Livio, thanks for contributing to the Ontario 360 series and for joining us today.
Thank you, Sean. Thank you, Drew. A pleasure to be here.
Livio, let's start if we could, and I know we want to focus in on the last couple of years and the impact of the pandemic with the long view, because the paper really provides great insight with regard to the arc of kind of, fiscal and economic circumstances over the last generation, 3 decades or so. Take us through, if you would, what you found in analyzing the numbers, and you know them as well as anybody, with regard to, the history of Ontario fiscal policy, debt and deficit, and the circumstances that we find ourselves in today in the wake of the pandemic, if you would, to start off.
Certainly. Well, it's an interesting story. I mean, most of us tend to live in the short run, but, if you sort of look at the last 30 to 40 years, Ontario's public finances have been marked by a definite trend towards what I would term unsustainable public finances. And so the way you define that, of course, is a basic definition of sustainability is your public finances are sustainable if your debt to GDP ratio is flat or declining. Over the last 30 to 40 years, Ontario's debt to GDP ratio has been steadily rising. But it hasn't caused alarm because although the long term is a rising debt to GDP ratio, it's punctuated by these periods where the debt to GDP ratio stays flat, which looks sustainable when you're within that period. So there's roughly 3 periods where there's been these surges in public debt, and it's risen faster than output, and so the debt to GDP ratio goes up. And so the first period was the early 1990s, where the debt to GDP ratio begins at something like 12 or 13%, and then surges upwards. It levels off by the end of the 1990s, and stays relatively flat. Then there's another surge, approximately the Great Recession, the financial crisis, 2008, 2009. There's another surge there. And then it gradually levels off again. And now with the pandemic, there's been this third surge. And so when it levels off, the tendency is, to resume business as usual because it looks like things are sustainable. But over the course of 30 to 40 years, Ontario's run deficits almost 85% of the time. I mean, if you had to gamble on whether there's going to be a deficit this year, you're well within the odds of picking that there's going to be one, because 85% of the time there is. And so the debt to GDP ratio has gone from about 13%. It's now well over 40%, and it looks like it's going to be 43, 42% over the next couple of years. And so the question is, what happens next? And if you look at the spring budget, they actually had a section forecasting, for the next decade, and they basically had a forecast of the debt to GDP ratio, again, leveling off and staying relatively stable, even, declining a bit. And it'll be interesting to see now. There's been a fall fiscal update. The FAO has done their own numbers, and there's going to be a budget soon. So it will be interesting to see what the projections are. But my guess would be that what's going to happen is that that debt to GDP ratio will probably level off because in the short term, because of the pandemic, there's been a lot going on, so to speak. And that a lot going on is going to place fairly large demands, I think, on the government Plus, the government, of course, has its own ideas, I suppose, of what it would like to do with public finances also. So will it be interesting to see what happens there.
That's a masterclass, Livio, covering 30 years of Ontario fiscal policy in a short, concise description. There's a couple of things that come to mind in hearing that recent history. The first is this is not a partisan issue. 85% of annual budgetary balances have been tilted in the direction of deficits, and that, of course, has come under each of the major provincial parties in Ontario. The second point you make about debt to GDP being the marker for determining unsustainability is an important one. We'll come to that. But the last point I just wanted you to unpack is this question of whether Ontario finds itself, independent of the pandemic, in what one might describe as a structural deficit. What is a structural deficit? Is that a proper characterization of Ontario's fiscal policy over the past 30 years or so? And what is driving it? Is it that revenues are too low or spending is too high? What's the crux of this recent history of sustained and protracted deficit spending?
Well, what seems to happen is every time there's sort of a shock, a fiscal shock, a gap opens up between revenues and expenditures. And so that's happened 3 times where there's been this major gap. And then eventually they do close the gap or come very close to closing the gap. But as soon as they close it, things level off, and then a shock opens it up again. So that's been the crux of the problem, in that you have these fiscal shocks that sort of open up the spending. If you average it out over the 30 to 40 years, revenues have been rising at about 4% a year. Total expenditures have also been averaging about 4% a year. So it's one of those interesting situations where the averages says, well, things look sustainable because revenues and expenditures have been pretty much growing in tandem over 30 or 40 years. But then when you unpack it into shorter periods, there's these periods where basically a recession occurs, spending soars, revenue drops somewhat, and that's where the gap opens up, and then it takes quite a few years to close that gap again. So that's part of the issue. The other part of the issue is that there's been changes in government accounting or bookkeeping. I'm not a public sector accountant, but what's happened, of course, is that the government now is, all governments in Canada, actually, it's not just on the Ontario government, have been basically separating out their sort of capital and budgetary expenditures. And so they've been adding to the net debt independently. So if you look at accumulated deficits and compare it to the change in net debt, the change in net debt is much larger than the change in accumulated deficits. And that's because there's substantial borrowing going on for infrastructure separate from the regular budgetary process. And so the net GDP ratio has been going up, not just because of deficits on the budgetary revenue and expenditure side, but because of these additions to the debt through assorted capital projects. And the justification for that, of course, is that interest rates are at historic lows. And so you should borrow to fund spending on much needed infrastructure projects. And so that has been a separate dynamic. So, I mean, you've been adding on to the debt through these sort of 2 dynamics. And as long as your interest rate on the debt that you're servicing stays below the growth rate of the economy, you can continue doing that for quite some time. But interest rates are rising, although they're still not rising to an extent, I think, where it's going to erode that sort of gap between the interest rate and the growth rate that much. But the stock of debt, the mass of debt is so large now that relatively small increases in interest rate will add to your debt servicing costs. You're looking at about, the Ontario budget is roughly now pushing 180 billion in expending, and 13, 14 billion of that is debt service. As a proportion, that's actually not a lot. However, if interest rates go up, that can start to increase. But as much as it's not a lot, it's, I think, after health, education, and child and social services, I think it's still the fourth biggest expenditure category now. So we're spending more on debt servicing, for example, than you spend on post-secondary education or justice or transportation. So I mean, it is a substantial chunk of money. So the risk, of course, is that if interest rates do continue to rise as the debt starts to roll over and you refinance it at the new and higher rates, eventually those debt service costs have the potential of crowding out more spending.
Yeah, I'd note that, and you can't, I don't think about provincial debt entirely separately from other orders of government. And of course, the federal debt to GDP ratio is now at 50% after the big spending during the pandemic. You add low 40s and 50 and you're at 90% plus, which actually is higher than it was in the mid 90s when Canada hit the debt wall. The difference, as you point out, Livio, is interest rates are a lot lower now, but they are starting to rise. And there were suggestions last week from the Bank of Canada that they will continue to rise, that, there won't be just a couple of increases in rates. It sort of leads you to sort of a perception, perhaps, that we've got, Cadillac Public Services on a Chevy economy, or Chevy spending, perhaps. But then you take apart the biggest part of the provincial budget, and that's healthcare, which, coincidentally is also about 43% of the provincial budget. And you note that actually per capita spending is lower than the national average. And we've actually managed in the province to lever down the growth in healthcare spending, despite an aging population and matters like that. Maybe you could talk about what you found with regard to healthcare and trends with regard to that being by far the biggest part of the provincial budget.
Certainly. Well, it's interesting that the PBO, doing their periodic sustainability analyses, also made the point that Ontario, for the time being, looks sustainable because of low interest rates and because we tend to spend below average per capita on healthcare.
Right.
And what's happened in Ontario is, if you look at the last decade or so, Ontario has actually successfully bent the healthcare cost curve, if you want to call it that. Real per capita health spending in Ontario prior to about 2012, 2013 was rising at between 2% and 3% a year. Since then, it averaged, up until the pandemic, it averaged up below 1% a year. So that is a very low rate of growth of real per capita health spending by historical standards. Now, during the pandemic, of course, there's been this surge again, but going forward, then the question is, what's going to happen to health spending? Because that decade of lower real per capita growth, in a sense, in Ontario, seems to have, is going to be associated with much of what's happened during the pandemic. There was an obvious lack of surge capacity. Ontario, if you look at, say, hospital beds per capita, is probably at the bottom of the 10 Canadian provinces. But then Canada as a whole is practically at the bottom of the OECD countries. So if you look at it in those terms, even though we spend a lot as a share of GDP on healthcare in Canada, like we're in the top 10 spenders probably in the OECD, and yet a lot of our indicators, physicians per capita, nurses per capita, beds per capita, seem to be at the bottom of the OECD. And then within that, within Canada, Ontario tends to be further down. So I think healthcare is going to be under a fair amount of pressure in terms of when it comes to asks as you move into the next couple of years, in terms of dealing with, how do you, in a sense, make sure that the next time there's this type of crisis, we're able to deal with it. I mean, the Ontario healthcare system, as long as there was no extraordinary situation, did very well. I mean, it was an awful lot like, if you think about it, we've adopted the Toyota Kanban system, just-in-time inventory management. I mean, the system basically had a just the right number of beds and capacity to deal with sort of routine demands fairly efficiently. I mean, there was waiting lists, but that's standard in the Canadian system. But the pandemic, of course, showed that was a bit of a problem. And one of the reasons I think our lockdowns, of course, in Ontario were so protracted was to manage hospital capacity more than anything. Yes. And that's a terrible economic cost, a social cost. I mean, the cost in the education system in terms of delayed learning. So all of that in a sense, because, you did get your healthcare costs under control. And so going forward, what can you do to remedy that? And, I mean, that's not an easy question to answer.
It's such an important point, Livio, that going forward, one of the inevitable pressures facing Ontario's budget will be calls for increases in healthcare spending to deal with the resiliency issue that you described, as well as the wait lists and backlogs that have built up over the course of the pandemic itself, something that we've documented at Ontario 360. But more generally, we're heading into an election campaign in the province. Elections campaigns tend to be times when different political parties put forward various spending proposals, all with the goal of, on one hand, conveying their respective vision for the province, on the other hand, appealing to the electorate. If you were advising the different political parties, not on their individual proposals, but just on the question of the kind of fiscal foundation for the province of Ontario, what steps should the next government take to ensure that even with these various spending pressures and demands, that the province's public finances don't get out of control?
That's a very good question. I mean, let's face facts. We all operate in the short term, and in the short term, interest rates are still low. Revenues have actually done a lot better than expected. I mean, there was all this angst that the pandemic, there was this revenue collapse, but the revenue shortfall was just those first few months of the first wave. After that, things seem to have recovered relatively well. So revenues are, in a sense, going to be healthy. Interest rates are low. So in the short term, the government will probably be able to make greater progress on balancing its budget than we would have expected, as well as probably borrow more to address some of the infrastructure issues that have been flagged, whether it's in healthcare or education or housing. I mean, that's another big pressure point. So the question is then going forward, how is that going to be done? And I don't think it matters which political party is in power. Interest rates are low. And so when interest rates are low, there's a tendency to basically, well, the lowest price is the law. You can buy everything. And that's a bit of a problem. I really think they're going to have to make more of an effort to prioritize where the highest return is going to be on, say, infrastructure investment or on spending. And that's going to require a more careful assessment. I mean, I've always been a proponent of having a more arm's length external evaluation process on that and sort of, insulated a bit more from the hands of politicians. I mean, politicians are very well intentioned, but, as we all know, the road to debt, like the road to hell, is paved with good intentions. And so you really want to, get, more of a business economic engineering perspective on capital projects, infrastructure projects in the health sector, in terms of where is the marginal dollar being spent by the government going to be yielding its highest benefit. I mean, that would be my only advice. I mean, the tendency will be to sort of basically spend as much as you can to please as many people as you can. And I think that's the short-term thinking that's resulted in the long-term debt to GDP ratio gradually rising over 40 years. At some point, you either discipline yourself or eventually interest rates will discipline you one way or the other.
As Sean pointed out, over 3 decades, all 3 parties have been in power, and the trend has been flat rise, taking us from 13%, as you point out, to the low 40s in terms of debt to GDP. Some of the policy initiatives, or the point you make with regard to the balance between politics and policy, I think is an important one. This was crunched in terms of a review a decade ago by Don Drummond, former Associate Deputy Minister of Finance in Ottawa, who looked at the panoply of all government spending virtually in Ontario, including capital spending, had a series of proposals. Many of us worked with him on that. And I'm not sure that it had as big an impact as it might have had. Is it time for something similar now? And do you think that maybe given the fact that the sustainability of finances may be worse, in fact, than it was a decade ago, it may have something like this might have greater traction?
Well, actually, the Drummond report is probably worth a reread now, even a decade later, because many of the things that were suggested in the end probably, weren't actually implemented. I mean, should we, do it again? It's worth doing. I guess my feeling is that it's hard not to feel we're in some kind of wheel of time cycle when things have happened before and they happen again. And in the end, we don't seem to address the problem. It does seem like we don't address the issues until your back is literally up against a wall. And I think that's really dangerous. Should we have another review a la Don Drummond of public finances, including, tax system reform? Sure. But, if it's done and it's simply a delaying tactic for a couple of years and then, it's shelved because something else comes along, it's always worth doing, but it's in the implementation, it's in the follow through, I think, where the deficiencies are. And, I'm an economist. I'm an academic. I guess I don't understand, aside from watching episodes of Yes Minister, which may not be the best, metaphor for how government works. I don't understand how, in a sense, the decision-making process and the politics, in a sense, in the short term, always seems to trump any type of quantitative or qualitative evidence or methodical analysis. So it's not that they don't have an effect. I think they do, but it's in very small incremental steps. It's very measured. So it's not as if all these policy reports don't matter. I think they do. People do read them, and I think the ideas do get out there, but it just takes a long time, it seems, to percolate and generate the type of change. And as long as you're not hit by sudden shocks, yeah, you can get by, but it's when sudden shocks happen that the deficiencies of the current situation become apparent, as has happened during the pandemic. But once things sort of calm down, the tendency is to resort to business as usual and taking things slow and very incremental types of changes.
Well, to the extent to which Ontario policymakers are thinking about these questions, they'll be greatly aided by a paper by Professor Livio DiMatteo. The paper is entitled After the Storm, an overview of Ontario's fiscal challenges. We were honored to publish it at the Ontario 360 project, and we were honored to speak with you today, Livio. Viewers can find Livio's paper at our website, on360.ca. It's one of many that we'll be publishing over the coming weeks to help inform policymaking in the context of the forthcoming Ontario election and, of course, post-election transition. And it seems to me Livio's paper provides a fundamental foundation to the different policy proposals that the various parties will put forward. They'll need to root those promises in the fiscal context that he's just outlined so aptly today. Thank you, Livio. Thank you, Drew. And thank you, viewers, for tuning in.